Well, Zimbabwe is trying to reintroduce its own currency. On Monday, the government banned the day-to-day use of foreign currencies such as the US dollar and South African rand. That's as President Emmerson Mnangagwa tries to repair an economy that's been ruined by hyperinflation and failed economic measures. But analysts say the decision could make things worse because the country has few reserves or exports. The local currency is technically known as the Rtgs dollar, or what people have called the Zollar. Whatever the name, it's now Zimbabwe's sole legal tender. The central bank has raised its overnight lending rate from 15 to 50% to try to defend its value, which has fallen from 2.5 to 6 Zimbabwean dollars to the greenback since it was introduced in February. On the black market, it's trading even lower at 11 to 12 to the US dollar. Now, inflation in Zimbabwe reached nearly 98% last month, eroding incomes and savings. Many people in Zimbabwe fear a return to the hyperinflation era a decade ago when it reached 500 billion%. Well, let's get more on this now with Derek Matyszak in Zimbabwe's capital, Harare. He's a senior researcher at the Institute for Security Studies. Welcome back to Money Talks, Derek. Now, President Mnangagwa has justified this move by saying when the majority of people earn in the local currency and everything's priced in US dollars, it really pushes up the cost of living for Zimbabwean people. Do you agree with this?
Well, yes and no. The context of these particular regulations that came in, making the Rtgs dollar the sole legal tender, is wage negotiations that were ongoing with civil servants. And because of the declining value of the Rtgs money, which is a quasi-currency, it's only available in electronic form. Because of the declining value of this money, it's the currency, if you want to call it that, in which civil servants are paid. The civil servants have been saying they wish to be paid in US dollars because the traders are charging them for goods and services in US dollars. So to counter this demand from the civil servants, the government has introduced the regulations to say, okay, the traders will no longer be able to charge you in US dollars, so you can't make your wage demand in US dollars. That's the background to this situation.
Interesting. Okay. The president also points to this creation of a two-tiered economy, one in the Rtgs currency and one in US dollars. So with the US dollar, I guess, being banned as legal tender, will this fix this disparity?
Well, it's going to make the situation worse because most of the time when people are charging for products in US dollars, it's because those products are imported or contain an imported component. So unless the trader obtains US dollars, the trader is not going to be able to import those products and thus won't be able to sell them to the public. What that means is that shops that are selling imported products, and the vast majority of the products in Zimbabwe are imported at the moment, those shops are going to close their doors and say we can no longer trade because we are not receiving the US dollars to replace our stock.
Now, part of the reason why they introduced the use of foreign currencies was obviously to stabilize the economy, stabilize inflation. Inflation is still quite high, 98%, a far cry from the 500 billion% we saw a decade ago. What's causing this inflation to rise, though?
This is a bit of a legacy from the Mugabe era. Under Robert Mugabe, basically an excess of treasury bills were issued. Those treasury bills were paid upon maturity simply by creating this Rtgs money. So essentially M3, the money supply, expanded enormously. That Rtgs money was not backed by any goods or services in any way, and it's the inflationary effect of that which is now coming through the system.
Interesting. Now, are there fears that perhaps we could see hyperinflation come back as this local currency remains the sole legal tender in Zimbabwe?
Well, I'm not sure that it will. The regulations that have been drafted, which have caused this impression that the RTGS dollar is the sole legal tender, they are very badly drawn. They look like they've been drawn to be deliberately ambiguous. And it may be that once the wage negotiations are over, things will settle down and people will carry on as they were before and charge for some goods in US dollars.
Okay, we'll see how this unfolds. Derek Matyszak in Harare, thank you so much again for your time.